Good morning, and today we are doing the daily wrap-up early. There's the Fed meeting in the afternoon, and that can create a lot of volatility for which I don't like to participate. So let's go back to things that were on our homework yesterday. One of the top ideas was the Australian dollar long. This is the daily chart on the Australian dollar. We had a down bar here, inside maintains down, up, outside maintains up, down, down. So this is our setup bar right here, this doji. It's green, it's a doji, and it's coming off the back of a very clean ABC on the daily. And so this is a good looking setup. Now, if we take it down to the 15-minute, the first time we poked above was 12:45 Central, and we got a bit of a hoagie there. Then we had this poke up at 1:45, which again is European Open, around that 2 a.m. And if you follow these bars extremely close, that's an up bar. This is inside, so it's up. This is down. This got higher, 36.5, 37, half a tick higher, and a couple of ticks higher there. So that's an up bar, down bar, down bar. So by now, you know, and I'm going to blow this up because in watching my own videos, I realize sometimes it's hard to see the granularity. But this is a very clean A, B, C. And now that we've had the daily high violation, this is our 15-minute pattern that sets up our risk bar to be this 2:45 a.m. bar right here. And the size of that bar is 8 ticks. 40 on top of that would be 72.74. And I'm not sure why I did 40. That would be 5R. So anyway, 72.74 is 5R. I had it calculated wrong in my head. I thought that was 4R, but that's 5. And 82 would have been 6. So we've made 6R from this risk bar, which of course, you know, I wasn't up at 2:45 in the morning. I doubt very many of you were. But it gives you the direction to, gives you the right direction to trade in. And that is priceless because there are plenty more setups throughout the day. And if that's your risk bar, you know, there's your 6R. So anyway, let me just go on to another one. There's so many things I want to cover today. Copper had a very similar situation. You know, again, we have this A, B, C, although this is a hoagie. So if you do the official bar by bar, you can see an ABC. Otherwise, it just looks like one leg. But either way, this was a respectable setup bar. And even though it's green, red, the reason it's respectable is the size of these bars is decelerating. You know, I bet if we were to look at the Taylor count here, you know, yesterday we had a PF3 down 2 days ago. Yesterday we already had the ROC flip up. So we're basically working with an ROC divergence here. ROC is just the 2-period rate of change. And, you know, between that low and that low, we have a divergence. We already flipped up, so taking out today's high is a good sign that we're going to get continuation. Taking that down to a 15-minute, here was our first break. And again, you got to be real careful in counting these. This is your up, up, down, 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 down. Now, on a bar by bar basis, this would be down, and this would have been one swing down. But if you consider, you know, these two bars, you know, when you have an inside bar, the concept is you want to disregard this bar. You know, just imagine everyone went to lunch for a bar and no new information was generated in that bar because we didn't pierce a previous high or a previous low. And then here we did pierce a previous high, and of the high 2 bars ago. So to me that is significant enough to call it an upswing. And then we've got this. So again, you know, blowing this up to make it very clear on the video. We have that right there, and this is your risk bar. And again, this happened at 2:45 in the morning. It happened alongside copper. And, you know, if we zoom out, I believe it was 62 something, we got 4R. So, you know, again, this is the 4R trade, which I wasn't expecting would work as well today, you know, given FOMC. Now, here's the euro. Gave us another chance today. You know, again, this was initially a setup bar. Yesterday, we got hosed on it. Today, on that first break, and you can see in the big picture, it's still just chopping around in a range waiting for FOMC. It's not going to declare itself and make a huge move ahead of that announcement, regardless of what the announcement is. But nobody wants to get caught flat-footed on a big position. So usually people wait until after that decision to make a trade. I mean, to take on a position. But from a trade standpoint, we took out the high at 6:40 in the morning, previous day high. And that, you know, again, is a time where we can use the 5-minute chart because we're already into, you know, I consider 7 a.m. the start of the U.S. session when things start to get active. And from here, we have a, oops, wrong one. We have a clean, let's see, this high is 43.5, 44. So we have the same situation where this is an inside bar, and then this one took out the high of the previous bar. So looking at it like this, we had a fairly tight risk bar right here of 7.5 ticks. That would be 30, so 58 would have gotten our 4R. So we got 58 on this little surprise bar right here. 58, we can go to 73, so we made 6R on it also. You know, so again, between 7:45 a.m. and 9:15, at 90 minutes, this is 6 times your risk on a trade. And it's technically not even gone anywhere. You know, the euro is just going around in a range, but reading that structure taught you that, you know, can teach you that this is the bar to risk against, and any one 5-minute bar can give you multiples of risk when you do it that way. Now, the British pound is one that I was more interested in, and it ended up not working out as well. Here it pulled back A, and then you got a B, and is this the 5-minute? This is a 15-minute, I'm sorry. So on a 5-minute, you had a very clean, after we took out the high, and I'm sorry, let me start again with the daily. On the daily, you did make a higher high yesterday, but it was a fairly ugly red bar, so not the kind of bar you'd want to take, you know, take the trade above. Then we had a day of repair, and if we add the ROC, you can see also that we have this divergence over here, you know, and it already flipped up on this day. So, you know, we may actually be overstaying our welcome here, but, you know, typically it's the day after this, assuming there was a good setup that you want. Here it's kind of one day further down the pipe. Now, going down to a 5-minute, and I'll show you the 15 also, but this did a similar thing to the euro. At 6:45, we broke above here, and then we got our A, B, C, and we got a fairly tight risk bar. But now here's something that was unfortunate. This risk bar held through this shakeout, and then we just had this tiny little trap down here that would have taken us out of that risk bar before making the move. And, you know, based on that risk bar, 114 would have been 4R, so it didn't even get to 4R yet on that. If we looked at it on a 15-minute basis, it did a similar thing. You had A, B, okay, let's be very methodical with how we label these. Up, down, down, up, 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 down, down, up. So here, with an equal low, this would have been our bottom, But what I would suggest is when we see equal lows to not count that bar. And I got trapped in this myself, but I've seen two examples of this today where an equal bar does not make a good one. We always want a lower one. Just like if this were 1 or 2 ticks above, we wouldn't take it. I'm now going to consider if it's exactly equal to not take it as well. And this would have given you a good first start, but then you had this flush right here. So had we not taken that, that would also be an up. That would also be an up. It just ended up being a bunch of sloppy chop here. So a couple of takeaways: trading a currency ahead of the FOMC, the British pound in particular. And then now, in doing this video, I noticed we're actually on the second day of the ROC up, which is less ideal. But yeah, this was a potential minefield today for this. Moving along, the indices were our favorite play from yesterday. We had several reasons. One is on the daily setup, we have this trap here. We took that out, had a trap, long tail, big green body, engulfing half of that previous area. So a lot of good reasons for this to be a good daily setup bar. It's technically an ABC off of this high, but that's just kind of within a bigger pattern. You got this ABC here, and then you have a reset by just having one wave there. Then you have another ABC here, which is all just chopping. And this whole pattern could just fall apart this afternoon. There's no guarantees. But doing what we do with the daily switch of trend, the Russell broke out around midnight, and it went straight up. So this leg is straight up to here, straight up to here, straight up to here, straight up to here. So up until this point, we've only had one-legged pullbacks. So our first two-legged pullback was right here, and it was beautifully textbook on the Russell. And it gave us this tiny risk bar right before the open, this tiny risk bar of 86.20 minus 83.50, 2.7 points. And then, 5 bars after the open, we got to 2018.30. 1986.20 divided by 270. It's almost 12 times your risk up here. So definitely over 10 times your risk. And this is kind of where, reasonably you may have been looking for a fib extension, but this way blew that out of the water. That was the Russell. Now let's look at the Nasdaq, and you can see it got a little dirtier. We had the same kind of move with only one-legged pullbacks. And this was our first two-legged pullback. And you could have mistaken this for the entire two-legged pullback, ending at 615. And again, with things like crude oil and nat gas, the 8 a.m. pit is significant. The EIA release is significant. With equity indices, the 830 bar, the pit open, is significant. So sometimes if you get a setup, that's too close to the pit open, it's gonna fail, and that would it's just one of those things that fail. You take your 1 hour hickey there. Then if you were able to follow it down to here, or let's say you switch to a 30-minute, realizing that the 15-minute was too didn't work, then you did get a clean ABC. But now here, this low is 1375, this low is 1225, so this being an outside bar is still down, and your trigger wouldn't be until up here. So that's not really a trade you'd want to take when it's essentially already made this big of a move. So that would be one that you just watch and set aside and say that you missed it. But if you were watching on the S&P, you did get a clean A, B, C, and then you got a risk bar here, And this risk bar, I believe, is made less than 4R to this point, just barely, I think 42 or something above was 4R. And if you notice, though, we're still hoagieing in this 30-minute. And we're probably going to continue to do that because nobody is going to want to make a huge directional move ahead of FOMC, so it makes sense that we start balancing. So ideally, with all the indices having the same setup, that setup being a PF3 down followed by a flip up with a good setup bar, and I guess with the S&P you already had an outside bar. With the Nasdaq you had an outside bar, and that's why I gravitated to the Russell, because it had not already had an outside bar, because outside bars can create a little more noise and chop, as we saw in the setups. The setup on the Russell was textbook clean. The setup on the Nasdaq, kind of had one fake out here, made you go to a higher time frame, and then it ended up, going lower, so not an ideal setup bar. Same thing with the S&P. The S&P did have a decent setup bar and a decent move, but again, coming off of an outside day, I expect more noise and a tighter thing on the Russell. So knowing that each of these daily patterns was the same, that's NASDAQ, then you can monitor all three simultaneously and let the market tell you which one to pull you into. So that is, that was it for the indices there. Then I wanted to point out a couple of shorter term patterns that popped up when we were doing the Russell here. You've got, the S&P. If we look for our hoagies, and so here on a 2-minute chart, let's put our RSI 14 down again. This impulse bar from 910 to 912 set up the bald man pattern again. And again, we went from below RSI 14 below 50 to above 50, which validates this as a setup bar, and had such a tight bar here that taking this out with your risk down here is barely 3.5 points of risk, and we got about 25 points, so about 25 divided by 3.5, about 7 times your risk on a 2-minute trade that resolved itself in 6 minutes. And if you were further watching the 1 minute simultaneously to that 2-minute setup, you noticed a hoagie right there. So however you traded it, whether you traded it as a 1-minute hoagie or a 2-minute bald man pattern, you still got 6 or 7 times your risk on that. And then another thing I wanted to point out on crude, off of this low in the morning, we had an A, and then here's kind of your 2-legged B, and really this didn't even take out that low. So I was looking at it more as an A, B, C, and this would have been your U-turn spot, and your U-turn gave you quite a bit of movement to the upside. And really, in just looking at a U-turn for a scalp, since this is all an inside day, inside of a bigger pattern, that was a reasonable spot to go for, and we got it around here. And then the other thing I found interesting on the crude chart was, off of that high that was made, you can see how clean these 1-minute waves are. Let me just take every other distraction off. And this here is a very clean 2 waves. This could have been a risk bar for a scalp. And then again, here to here to here, it's clean waves. This would have been a good bar to short under. And then here we got one. We finally got a leg down below here. And then actually, remember, this was our U-turn point. This would be our U-turn point now, with this being high of day. ABC, this is our U-turn point. We broke below, and 1 leg up, and then continued lower. And again, it happened in a two-wave pattern. And mind you, I'm doing some of this just, on the fly as we go. This is all one wave up. So, you usually have these two-wave patterns, ABC, ABC, ABC. Well, I guess here it was one leg, A, B, and then this was a two-legged down pattern from there. But sometimes you have a reset, and one of these big, long, one-legged waves is somewhat of a reset. And then let's see what happened from there. This is pretty much one wave down here. So I guess this was earlier when things were fairly liquid, and then I guess today was probably EIA day. That might have been this bar right here. Nope, 940. No, it doesn't look like we had EIA today because I don't recognize it in the bars. But my point is, you can just look at these two-wave patterns repeatedly and find little points to risk against, and places that would be logical stops and U-turns, things like that. So I'll leave you with a couple of things that are in play. Gold, for one. On the daily chart, nothing particularly constructive. On a 30-minute chart, we're starting to form a good-looking divergence. We've got this here, which corresponds to this low. We have this low, which corresponds to this area, and then this did make a lower low. We haven't really confirmed out of here. This bar up here would be 21.3. So really we have no new information. This leg could still be lower, but it's forming. This is how you start paying attention to it's forming, and then once you get confirmation, you can look for another entry. So if we want to take a stab at a gold long, you could look at something like, let's see what looks clean here. There we go. This 2-minute looks fairly clean. You've got an A, B, C, and if we take out this high, we have a 2-minute U-turn, and that's a good entry. Looking at a 5-minute, this whole thing here was a hoagie. 1, 2, 3, 4 bars inside was a hoagie. We did break out of that. We've kind of come back in. It's not necessarily respecting the top of the hoagie well, but that's potentially another way to enter. As ugly as the trend has been against us, I think it's better to wait for a little more confirmation, and because I think it'll have a good ways to go. Even on the 30-minute, if we kind of aim towards the top of this formation, we're looking at 1929. So there should be a play to catch a few bucks at the very least. But again, with FOMC, do you really want to be holding that through an announcement? And I'll leave you with one last thing that I just noticed recently, and this is the Nasdaq. In fact, let's just look at the QQQ to get rid of all that futures gunk. But we've basically had 3 lower lows. This low here is 334.15, 318.26, 317.45. So we've had 3 lower lows on the Nasdaq and 3 higher lows in RSI. And we've confirmed. So this could be it. That this might have been the bottom in the stock market. Here's our wedge. It hasn't confirmed. Sure, we could go back and test the bottom again, but on the futures, I guess the part we need is clean enough. This part here, we have a low, we have a low, we have a low. We have 3 lower lows in price, yet 3 higher highs in RSI. And that is a sign of a loss of momentum, and it starts to look like a wedge. I'm not sure exactly how you'd draw that in, but if you can see the general shape of it looks like a wedge, it's quite possible that the bottom is in. So anyway, no one trade needs to disproportionately You don't need to disproportionately risk on any one trade. Whether the bottom is in, whether we're going to keep falling, whether we're going sideways, we find multiple ways to make 4 to 6 to, I think it was it 12, almost 12 times on the Russell in a day. So keep that in mind. Stay balanced. Take the afternoon off. You don't have to trade during FOMC. And I am actually going to be out of town for a week, so I may not be posting, but I will be back. Study up on the content and ask me questions, and I'm happy to answer.